Welcome back. Today is October 30th, 2023, and this is your Monday market update. These markets are as busy as ever, and the news cycle is the main driver. Seasonality too, but let's review what happened last week and what's on the docket for this week. Busy in both directions. Last Monday, stocks fell at the open as the 10-year yield once again hit the highest level since 2007, over 5% again. And as we've seen, this is a headwind on the markets. Throughout the day, there was little news from the Middle East, and as you'll see, no news was viewed as good news from the horrors that have been going on over there. One of the main focuses, the hostages, came into the news as headlines about some of them being returned hit the tape later. Oil fell, yields came back down, and stocks came off their lows, and the S&P ended down a bit less than 0.25%. The Dow was down about 0.5%, and the NASDAQ was in the green, 0.25%. Tuesday brought a bit of relief rally on the open, again focusing on the Treasury market. We'll talk about that in just a minute. Solid earnings did not hurt. Coke, Verizon, and even GE had good things to say. Stocks found some footing as big tech earnings were on the horizon, and a solid 2-year Treasury auction had markets steady and moving higher. Recall that these auctions have been turning events in the market a lot recently. By the end of the day, green was the color. The Dow was up about 2/3 of 1%, S&P up about 3/4 of 1%, snapping a 5-day losing slide. NASDAQ was up just under 1%. Back to the other side again, stocks gapped lower on Wednesday as the wrestling match between Google's 9% drop, earnings driven, and Microsoft's 3% rally, also earnings driven, gave way to Google as the winner. Selling was the mode. Again, positive for the market versus negative for the market news came about. There was a Speaker of the House chosen. Remains to be seen what he'll be able to do. Relative unknown, Mike Johnson, offset by the news that the market does not like. As I mentioned earlier, Netanyahu spoke about the upcoming phases of the war. There will be a ground offensive. Please pray for those soldiers. On the rate side, Bank of Canada held rates unchanged as expected, but the words mattered: stagflation and lower growth outlook. Israel's news, which was not really news, but the actual verbalizing of that news, had oil move up and the 10-year yield climb again, and stocks came for sale. The Dow was down 1/3 of 1%, S&P down 1.5%, and the NASDAQ down 2.5%. Thursday had stocks remain under pressure. Eco news and earnings news both contributing to the sell side. Strong eco data brought a rally to the dollar and the bond yields too. Market stabilized early in the afternoon. Two main reasons: a 7-year auction, remember I told you about auctions, and Yellen's comment about expected soft landing. After all the noise, markets got to selling again, ending off the lows, but still the lowest since late May for the S&P. Dow was down just under 1%, S&P down 1.25%, the NASDAQ was down another 1.75%. Earnings news after the close on Thursday gave a little better of a feel. Amazon and Intel, solid numbers. There was also some good news from Washington, or it seemed that way. The new speaker said that he supported a new spending bill that should lead to avoiding a government shutdown. That news, plus an inline PCE and core PCE, had markets on steady footing on the open on Friday, but that did not hold as more inflation expectation news was digested. There was enough news and fear of the unknown, especially from the Middle East, to bring stocks for sale as the day went on. Gold up, oil up, dollar steady. Yields did tick it down a bit, but it wasn't enough. S&P joined the NASDAQ in correction territory, down just about 0.5% of the day, but down over 10% since the high. The Dow was down 1.25%. The NASDAQ stayed green, up about 1/3 of 1%. For the week, the Dow was down just over 2%, S&P down 2.5%, and the NASDAQ was down a bit over 2.5%. Let's talk about this coming week. There's a lot going on. We've got a bunch of important earnings. Probably none more so than the widely held and closely watched Apple, but there are some other big ones that will tell a lot. McDonald's hit today, and we'll still get Yum Brands and restaurant brands this week to shed some light on the consumer's eating habits. Starbucks too, and that's just, of course, a read on life, right? So Caterpillar on the infrastructure read, and even some more technology stocks. I've been telling you that I think valuations continue to be the long-term determinant of this market. Earnings will tell a story, but beyond that, the market multiple is still driven by rates. And I've told you about how much the U.S. Treasury will have to issue in bonds to fund the deficit and the pressure on prices, thus higher yields, and that is a major headwind near term on multiples. Today, we'll get some of that, how much the government will need to borrow. And Wednesday, in addition to the Fed announcement and press conference, which is never a yawner, regardless of the expectations, we'll also get the auction schedule. These are things that we've reviewed, and they will move the market. The Bank of Japan was a big one today, big meeting. The Bank of England meets this week as well. We'll get a lot of growth report cards, PMIs and such. We'll get a lot of labor news. First week of the month, that means jobs weeks. Remember, that's JOLTS and jobless claims too. Global GDP will also help to open some eyes about the global growth, but like the U.S. GDP, remember that's rear view mirror. Overall, we'll be happy to end October. So far, far for the month, and we only have a few spooky days left. The Dow, NASDAQ, and S&P are down all over 3%. The big question, is there a rally here somewhere? Was October the bear killer we spoke about in the beginning of the month? We'll have to see. As I mentioned from the start today, this is a busy time, so please keep in touch. Only 2 more days this month, and then only 2 more months of the year. There's a lot to do. Please stay in touch. Please pray for the hostages and the success of the IDF. Have a good week.